Hi, Peter. I wanted to introduce myself. My name is Gabriela Garospi. I'm from the Forbes Finance Council and also have an educational platform in Spanish called Latino Wall Street. Very excited to have you with me today. Peter Schiff is a stockbroker, chief economist, financial commentator, and the host of SchiffRadio.com. He's also the CEO and chief global strategist of Euro Pacific Capital. Peter, before we get into the student loan relief that was just announced today and the Inflation Reduction Act, there's so many people out there using social media and the media to give their opinions about the economy, the government, the stock market, Bitcoin, you name it. Not only opinions, but also predictions. And it seems like everyone is an expert nowadays. What sets you apart from all the noise, and why should people listen to your insights and your predictions?
Well, I mean, I've gotten a lot of stuff right over the years. In fact, the things that I've gotten right are things that very few people saw coming, going back to the 2008 financial crisis, but even before that, the dot-com bubble. I was a pretty big critic of that. But I really made a name for myself predicting the 2008 financial crisis and talking about and writing about the housing bubble. But also everything that the Federal Reserve did in the aftermath of that crisis created the predicament that we're in now. And a lot of the things that I've been predicting over the last decade are in the process of coming true. I mean, some of them have come true along the way, but the real collapse that I saw coming even before the financial crisis, that's what we're headed for now. And I think I've done an excellent job, really, of laying out how this would all go down. I didn't know exactly the time frame into which it would be condensed. I mean, seems like things are playing out a little bit more slowly than I thought, but they're playing out exactly the way I thought, just on a bit of a longer time scale.
Got it. Okay. So I love your content, by the way. I listen to your podcast and I love it. And I love that it's all based on facts, right? So one of the things I'm curious about, and that I think a lot of people are curious about, is where exactly do you get your statistics and how can we educate others? Because at the end of the day, is what you're doing with your podcast, right? You're educating others to get the facts, to not only block the noise and look at the facts, but also question what the politicians and the Fed, what they're telling us.
Yeah, well, I don't have any of my own statistics. I mean, the statistics are what they are. I mean, they're out there, just that people ignore them. They don't like to pay attention, or they put some kind of positive spin on what really is, in fact, negative statistics or other information. And some of the statistics, of course, are highly manipulated, whether they're, the official inflation rate or the official unemployment rate or the official rate of GDP growth. So you really have to look behind the headlines. Don't just accept what the government is spoon feeding you. Look a little deeper into that meal and see what they're actually serving.
Right. So do our own research. Love that. So let's talk about what happened today. The student loan relief was just announced for borrowers making less than $125,000. I don't really want to get into this narrative if it's fair or unfair. For me, for example, that seems very unfair. I went to NYU. I had a six-figure student loan that I had to pay off, so it doesn't seem so fair to me. But is this just a strategy for the midterm elections? And what's the impact on the economy for not collecting these payments?
Well, it's certainly meant to buy votes for the midterms. I mean, it's basically an outright bribe to pay people to vote for them. And in fact, they extended the moratorium on student loan payments beyond the midterm elections. And that has been a very inflationary policy, because the money that the government is not collecting from former students, the Fed just creates it. So this is all inflationary. Remember, these students are going out there, or former students are spending money on goods and services that they otherwise would have sent to the government, right? So that's pushing up prices for everything. So the government is helping to create that inflation through the student loan debt forgiveness. And in fact, this entire plan is very inflationary. It's going to cause a big increase in inflation, as will the Inflation Reduction Act. But this is even going to create more inflation than that act will. I mean, they're both inflationary. But what people aren't even looking at beyond what's fair and what's not fair, of course, it's relief for some people, but it's a giant burden on others because, we're not getting it for free. So who is going to bear the cost of this debt relief? And it's the nation at whole is going to bear it in terms of much higher inflation, because this is going to be hundreds of billions of dollars, or maybe more, that the government's not going to collect in taxes, and therefore is going to be created through inflation. But also, college tuitions are going to rise much faster if this bill is passed than they otherwise would have. And remember, the only reason that college is so expensive is the government. The only reason that people have all these student loans is because the government made them, or the government guaranteed them. If the government didn't have any student loan program, students wouldn't have all these loans. College would be much cheaper, the way it was before college loans existed. When my father, for example, went to college, his parents didn't have any money to pay for his tuition, so he took a summer job as a waiter, and that's all he needed. And because he waited tables for a couple of months a year, he was able to pay all his tuition, all his room, all his board, everything, and graduate college debt-free. Nobody who went to college in the 40s or the 50s, for example, graduated with any debt. No matter how poor you were, you could always get a job and cover the cost of college. But the government drove tuition through the roof with student loans, and now this is going to drive them even faster, especially the new provision that says that your repayments are capped at 5% of your income. So no matter how much you borrow, the most you're ever going to have to pay back is 5% of your income. That means people will be indifferent, let's say, between borrowing $100,000 and borrowing $1 million, because your payments are going to be the same, whether you borrow $1 million or $100,000. So what difference does it make? The colleges know that. So the colleges are like, look, we're going to jack tuitions. We're going to double tuition. We're going to triple tuition. No one's going to care because no one's going to have to pay for it anyway. So college is going to get a lot more expensive. The size of the loans are going to get much bigger. They're not going to get repaid. And of course, everybody is going to take loans in the future. Nobody is going to be dumb enough to actually pay for college if they can basically get it for free. And once you open up that Pandora's box of loan forgiveness, well, it starts out at 10,000, 20,000, then it's 30,000, 50,000. I mean, once you open up that potential, everybody is going to expect more forgiveness. So nobody is going to pay for college. You just mentioned you paid for college. Nobody's going to do that. Why? You'd be an idiot to pay for college when you could just borrow the money and then have the loans forgiven. So now you're going to have a lot more people borrowing money to go to college. So the debt bubble is just going to completely explode. All of this is being driven by the government. It's moral hazard. The government made this problem, and now they're making the problem it created much worse.
Yes, it's always so surprising to me how much tuition has gone up. I was just checking the NYU tuition at the school where I went, and with room and board, it's now like 80,000 a year or something insane. I paid much less because it was a long time ago, but I just can't wrap my head around it going up even more than that, right?
Yeah, I did some research on tuitions at colleges like Yale and Harvard, and you go back to the 1800s and 1900s, obviously a long time ago, but before the government got involved, and there would be 40, 50-year periods where tuition didn't even go up. It stayed the same for like 40, 50 years. So it's like, this is a new thing. Yeah. College tuition didn't really start to rise rapidly until the 1960s. And that's when the government got involved with student loans. So it's the government that made college so expensive. The reason that people need to borrow money to go to college is because of the loans. If the loans didn't exist, college would be so inexpensive that you wouldn't need the loan. The government creates the need for the loan, and then they act like they've solved your problem. It's the old saying, the government is great at breaking your leg and then handing you a crutch and saying, you see, without me, you couldn't walk. Government made college expensive, and now government comes to the rescue with these loans.
Yeah, no, I love that. And that's definitely true. It's so wild to me how you can be so young and borrow a huge amount of money. It's almost like doesn't make any
No,
sense.
you can't. Only because the government guarantees the debt or makes the debt can you borrow that money. And it doesn't even matter. You can borrow money to study computer science or engineering, or sociology of sports. They don't care what your major is. You can major in something that's never going to help you earn any money, and it doesn't matter what your grades are. A D student could borrow money at the same rate as an A student. So it doesn't matter. Just as long as you go to college, you can borrow all this money. Doesn't matter what your grades are. Doesn't matter what you study. You get this. It's complete nonsense. The free market would never allow something like this. It's only when you have a government involved would you get something this ridiculous.
Yeah. So that brings me to our next question, which is the Inflation Reduction Act, right? That you briefly mentioned that was recently signed into law. It includes billions and billions of dollars for clean energy, manufacturing across solar, wind, nuclear, and hydrogen power, as well as electric vehicle factories. There's a saying that says, when Washington allocates money, Wall Street follows. What do you think about the clean energy sector as an investment?
Well, anytime the government is subsidizing something or redirecting capital towards certain things, it's redirecting it away from other things. And the way a free market allocates capital, it's very efficient. Capital goes to where it's most productive, most efficient. But when the government does it, it diverts resources from productive and efficient uses to unproductive, inefficient uses. And so that's what this is doing. And so by causing money to be diverted to wind or solar, when it would have been more efficient if used in other sources, the nation becomes poorer as a result. So everything is going to be more expensive because of the Inflation Reduction Act. It leads to a less efficient allocation of resources and a lower standard of living. And the way the standard of living is reduced is because prices are increased. So the effect of this bill will be the opposite of the title of the bill.
So it's just another strategy for the midterm elections.
Yeah, and to the extent that, could you make money investing in businesses that are going to be benefiting from government money? Sure. But, those companies benefit at the expense of other companies that might otherwise have got that capital, but instead, because of government, the capital goes someplace else. But that is a less efficient allocation of that capital. You don't want the government micromanaging how capital is allocated. That's a communist, model. You want a free market. You don't want some people in a room deciding, what industry should get money just based on a whim, just based on, a hunch, with no accountability for their decision making. You want private investors deciding where capital goes, where if they're wrong, they lose money. And if they're right, they make money. You want the profit and loss. That's a discipline that helps make sure that capital is allocated properly. Government, politicians, they don't have that discipline. That's why it doesn't work in Cuba. That's why the Soviet Union failed. That's why China abandoned communism and moved towards capitalism. It doesn't work. That's why West Germany prospered and East Germany did not, or South Korea versus North Korea. Anytime you've divided a country and you've had a free market country versus a planned economy, it's the planned economy that collapses and the freer economy that succeeds. So to the extent that we want to move away from free market forces and adopt central government planning, we are undermining our productivity and our quality of life.
Yeah, and it's very similar to what we saw with the CHIPS Act, right, with the semiconductor industry.
Yes, that's another disaster. The government should not be subsidizing a particular industry, over another industry. It'd be nice if we had a better chip industry, but that has to do with other regulations and taxes that have been imposed that have helped make America uncompetitive in all sorts of things. It's not just chips. Look at all the things that we used to make that we now import. So we've destroyed our manufacturing sector. with excess regulation and excess taxation. That's what the government should address, repealing regulation across the board, lowering taxes. But in order to lower taxes, we need massive cuts in government spending. But the Inflation Reduction Act is the opposite. It increases government spending. That's making the problem worse.
Mm-hmm. Absolutely. So I have two more questions for you. Could you walk us through, based on all of this, right, that we discussed, could you walk us through your forecast for the last quarter of this year into 2023 for the economy? Your latest ones haven't been so optimistic, right? Okay. So I would like to hear from you, based on everything we have discussed, what's your forecast?
Yeah, well, I call them as I see them. That's the problem. And I called for the U.S. economy to enter recession in the first half of 2022 in 2021. And despite the fact that a lot of people want to pretend that we're not in a recession and they want to redefine what a recession is, we're in a recession. And I believe we will still be in that recession at the end of the year. In fact, I think it's going to get worse in the second half than it was in the first half. But also, I think by the end of the year, inflation will be back on the upswing. So I think this little kind of a reprieve we've got where we've had a little bit of a reduction. We still have high inflation, just a little bit higher, less than it was. But I think by the end of the year, early next year, it's going to be coming back big time. So we're going to have a combination of a very severe recession. I think a lot of people will end up referring to it as a depression. While we have very high inflation, even higher than what we've seen so far. And of course, the actual rate of inflation is probably double what the CPI will admit to. So Americans are struggling with an unprecedented amount of inflation, and unfortunately, it's going to get worse, especially when the world wakes up to this reality and stops buying US dollars, because the US dollar has risen sharply, even though it's been losing purchasing power domestically. It's been gaining it relative to other currencies, and that's helped keep a lid on our inflation. As bad as it's been, it would have been much worse if the dollar hadn't risen on foreign exchange markets. But I think when the dollar finally collapses, which it will, it's going to send inflation into a whole new gear, as will the next round of quantitative easing, which I know is coming. Once the Fed is forced to admit how bad the economy is, then it's going to be forced to do something to stimulate it. And unfortunately, the stimulative will actually work as a sedative, but one thing it will stimulate is inflation. It will go from very bad to much worse once the Fed goes back to QE.
And just to be clear, the prediction about the dollar collapsing and QE, that's for 2023, or for?
Well, it could it could happen in 2023. I mean, I think it's going to take the dollar more than a year to collapse, so it could extend for several years. But it could certainly start, before the end of this year. I mean, the dollar could peak out and start to fall.
Yeah. And my last question for you is, how do we prepare as investors for what's coming with the IRS, right? Which is part of the Inflation Reduction Act as well.
Well, for the IRS, I mean, I think the people who have to worry about the IRS are small business owners. They're going to get harassed. People who are self-employed, people who have, these side hustles where they have a job, but they have a second or third job. They're going to get clobbered by the IRS. So there's really no advice I have, to protect yourself from that. But what I'm doing is helping people protect themselves from inflation and a weak dollar by how they're investing. And you can avoid that, I think, by investing internationally, by investing in economies that are in much better shape, currencies that will hold up on a relative basis much better than the dollar, investing in a lot of inflation hedges around the world, companies that will have pricing power and that own real assets and resources that will maintain or increase in value during a global inflation, which is really what we've got. And so if you've got substantial funds in a portfolio, I think it's very important that you recognize that what worked over the past 10 years will not work in the 10 years going forward. You don't want to be invested in U.S. tech stocks. You'll get killed. You don't want to be in U.S. dollars. You don't want any U.S. dollar-denominated bonds. You really got to think internationally, but you got to understand or know the difference, which countries to focus on and which to avoid, which sectors to over-concentrate and which to underweight or not invest in at all. And I've got a great team of portfolio managers that are analyzing these companies. We're doing a lot of research. I understand the macroeconomics behind a lot of this. So I think we have a very good team to help people protect themselves. I mean, inflation is basically a tax. It's how the US government is going to be funding its deficits. And if you don't want to pay that tax, then you need to avoid the inflation by avoiding the dollar, which is what is being inflated. And you can do that with a good portfolio of international equities and focus on the types of investments that will thrive when the US is experiencing high inflation and recession simultaneously. Very few people even remember the last time that happened in the 70s, let alone know how to invest through that. This is going to be much worse in the 70s, meaning much worse inflation and a much weaker economy. So the things that worked then are going to work even better now. You just have to understand what those things are and how to incorporate them into your portfolio. So we can help you at Euro Pacific Asset Management. You know, I have 5 mutual funds that people can buy at any discount brokerage firm that we manage, or you can talk to our, my representatives directly about having an account set up with my company that we can manage for you. Pick the portfolio, buy the stocks, and then manage the account for you, so that you don't have to do it yourself. A lot of people have a hard time knowing, if I'm going to invest in Singapore, I'm going to invest in Switzerland or Norway, or how do I know what companies to buy, or how do I get to those exchanges to do the foreign exchange? So we can make that whole process a lot simpler for people. And so I think it's better to let us manage the portfolio than try to create it yourself.
Got it. Yeah. So investing internationally and inflation hedges, by that you mean gold or other precious?
Gold is one, but I mean, it's the dollar that's losing value. But you want to own real assets. You want to own stuff that governments can't print. But you also want to be an owner of a business that can do well in an inflationary time period, because a lot of businesses are going to fail. So, but if you sell products that people need, well, you're in a much better position than if you're selling products that people don't necessarily need, but they'll buy if they can afford them. But if they can't afford them because the stuff they need is so expensive, well, if you sell those discretionary items, you're in trouble. Mm-hmm. But people will buy what they need first. And so that's what I want to sell. I want to be selling people what they have to buy, not what they buy if they have money left over after they buy what they have to buy.
Got it. And to finish, I actually had another question, more of a fun question. I want to just comment on your social media following, because you've been growing exponentially. Congratulations, Twitter, YouTube, right? All the platforms. There's obviously a lot of professionals, a lot of economists like yourself with credentials and credibility, but most haven't been as successful as you in reaching such a large audience. What do you think you're doing that others in your industry are not?
Well, probably because most of the stuff that you would be saying if you were in, finance, most people would find it boring, I guess. I think a lot of the things that I do are entertaining. I interject some humor into what I'm saying. And so I think to the extent that, you have people swallow some medicine with a spoonful of sugar, right, they're more likely to take it. So I think it's kind of the presentation. And I also think I'm saying a lot of stuff that's accurate. And so that's why I'm building up a following, because I'm building up a very good track record of getting stuff right. Mm-hmm. And I've never erased anything, some things I get wrong. Of course, I can't get everything right, but people can go back, for 10 years or more and look at what I said, look at what I wrote, and see what I got right and what I got wrong. But I think I got so much right that so many other people didn't even come close to getting right. That I've built up a pretty good following, because people want to know what I have to say, because I've been right in the past, and they think that, well, I may continue to be right in the future.
Yeah, and I also think it's consistency, right? Because you're very consistent on all these platforms, and I think that's where a lot of people.
Some people will say, well, you're just a broken clock, right? That's why I'm consistent. I'm just consistently broken. But I think I'm just consistent with the facts, and I'm not changing because the facts aren't changing. In fact, things are happening that I predicted. But keeping it all in perspective, I mean, I may have a lot of followers on social media relative to other stockbrokers, right, or economists. But if you compare me, to, let's say, a guy that's, on the internet, playing Minecraft, I mean, my kid follows people that have tens of millions of followers. He's got one guy on YouTube he watches with 100 million subscribers. So these guys, I mean, or he just pop stars, athletes, they get so many people following them. So I mean, compared to that, I mean, I'm a drop in the bucket. But the thing is, I'm appealing to people's just their intellect. So the fact that I'm getting the type of following I have, and in fact, and if you look at the engagement on, look at my YouTube. I mean, I get so many people, interacting or commenting on my tweets. I see people that have, I have, let's say, 800,000 followers. I'll see people with millions of followers get less interaction on their tweets.
Wow.
And there are people that have similar number of followers in mine, and they hardly get any interaction. I mean, they might put out a tweet and 10 people like it. I get thousands of people, that like them, and I get, hundreds and thousands of people commenting on them. So I know people are actually engaged and paying attention to what I'm saying, and they're motivated to comment. And of course, all the comments aren't positive. I get a lot of critics, on Twitter too. But at least if you're saying something and people are taking time to criticize you, you're making a difference. You're getting people to think, and maybe you're hitting a nerve, right? So people aren't generally indifferent to me, which also helps for social engagement. People, they love me or they hate me. There's very few people that are like kind of, they're indifferent. They form an opinion. And then if people have an opinion, if they love you or hate you, some people want to listen to me because, they are interested in what I have to say. And some people just want to make fun of it, so, but at least they listen.
Yeah, I was going to say that you seem to have like raving fans, or the opposite, right?
Yeah.
So that's the world of social media. But yeah, of course, I meant in your industry, right? Because it's all relative. We can talk about number of athletes, but in your industry, I think you are one of the most followed, probably. So I think that's
probably true. Although I don't, you look at some of these crypto guys, they get more followers than me because you have so many people now in crypto.
Yeah, I don't know if I count that as finance. It's a little.
But outside of crypto, I mean, I'm sure I'm the most followed stockbroker.
Yeah, I think so.
But, and even economists. I mean, I forget how many. No, maybe like, there could be some of these really big liberal economists. I wonder how many followers Paul Krugman has. I'm not sure.
Yeah, well, you were the most followed I found. So I wanted to say congratulations, because that's amazing that you're reaching and you're educating so many people. I do that as well. Actually, I have a platform in Spanish where I educate people about these subjects in Spanish. And we both live in Puerto Rico, so we have that in common.
Oh, okay. I didn't know you were here. I mean, I knew you were Spanish. I just didn't know you were Puerto Rico.
Yeah, we actually have friends in common. It's kind of funny, but I know Anna and Brad.
Anna and Brad. Yeah, they used to rent my condo.
Yeah, they're friends of mine. So that's a fun fact.
But did you know them from before Puerto Rico, or did you meet them here?
We met through friends here in Puerto Rico. We're part of a personal development, Tony Robbins type of stuff.
Yeah, they're into that.
I'm sure you've heard. I don't know if that's your thing, but that's how we met.
All right.
Okay, well, thank you so much, Peter, for your time.
All right. Take care.